Check and see if we're on. We're online? Okay. Hello everyone who is here with us at UMBC, and for those who are with us online, I've been told that we have some other guests from throughout the University System of Maryland, particularly at the University of Maryland Eastern Shore. So hello to those folks at UMBS, some others who might be at College Park, UMD, and other schools. So we thank you for joining us. This is part of our Enhancing Financial Literacy and Financial Education Seminar. Here, I'm Renetta Tull, Associate Vice Provost of Grad Student Development and Postdoctoral Affairs, and Director of the Commerce Program. So again, I welcome all of you today. I would like to thank Piyush Warren Pandey, who is our Graduate Assistant for Financial Education. He's been helping with this seminar and helped to put it together. And he has invited our guests today. Our guests today are from PNC Bank, McSweeney and Shanna Smith. And they're going to be talking with you today about financial decisions, about managing debt, and preparing future resources. So I'm not going to take any other time. I'm going to just go ahead and turn it right over to them because they have a lot of information for you, and they also hope that you will ask plenty of questions. So please do so. Those of you who are online, please type in your questions either on Google Plus or on YouTube, and we will make sure that our speakers get those so that they can answer those questions as well. Thank you very much. Let's welcome our guests.
Thank you. Good afternoon. My name is Beth McSweeney, and I work for PNC Education Lending. So I actually work more on the financial aid side of things than the traditional banking sort of thing. And I have worked with students. I was a counselor down at the University of Maryland, Baltimore downtown. So that's kind of the reason why I more do along these sort of presentations than maybe the branches might. Shanna has been gracious in including me in this. Want to go through actually very briefly some things because I know that as graduate students and older students, no offense, older students, that you all probably already know a lot of this information. So it's more reinforcement, helping you to keep you on track, so that when you are out there professionally and no longer a student, that you're ready for those decisions and ready to make positive decisions for your lives. So just want to look at making sure that you're kind of sticking with managing your money where you need to keep it managed. Also want to take a little bit of information around credit scores, credit reports, so that you all know what to do with regards to your credit, help you make the best decisions and get the best interest rates if you're borrowing money. And also some information on identity theft. So just some real 10 quick things to look at. You want to track your spending. You want to make sure that you are looking at a budget. You're not kind of free range with your money. Anytime that we're free range with our money, that's when we tend to get off track. We tend to kind of nickel and dime ourselves to death. So you want to set up a plan for yourself. You want to factor in fund money because nobody's saying that as a student you have to live like a pauper. I know you feel probably at times like you live like a pauper, but you do want to make sure that you factor in fund money. And one of the best things that you do for yourselves as far as fund activities is using that student identification card, because that will get you discounts, free, whatever. That is always the best thing about that student ID, aside from the fact that you're required to have them. Pace yourself. Don't think in terms of I've got to live so tightly and so on the edge that I can't do anything other than watch every dime that I spend. Nobody's ever going to say that. Just to be conservative with your money, especially now, because the less that you're spending, as far as jumping off the track with your budget, the better you are at keeping yourself from utilizing things that have interest tied to them. Go easy on credit cards. I had a question asked yesterday over here by a student. Do you recommend not having credit cards at all? And that's a personal decision, but what I would say is you don't need a wallet full of credit cards, because that wallet full of credit cards doesn't say that you are worth all that credit that you can access. It's actually saying you are able to get that much further in debt. So if you have 3 credit cards with $5,000 limits, that means that you are $15,000 possibility of being further and further in debt than the next person. You want to use credit for the big budget things that you do not have the money for immediately and that you have to have, or for emergencies. Set your own credit limit. Just because your credit card says you can spend $3,000 doesn't mean that you should. Most folks recommend that you not go over 30% of your credit limit. So if you have a $1,000 credit limit, you don't want to spend more than $300 on that card. Keep in mind that stuff happens, so you want to plan for it. You want to plan emergency-wise, have a little bit of a nest egg in the background so that you don't run into problems and have to go into debt, use your student loans, use your credit cards. And look ahead. What is coming down the pike that I may have to worry about expense-wise? Start it out, you all know, if you are living off of student loans, you have to make it last for a semester. It's not just from month to month, it's probably from January to May, September to December. And ask for help when needed. The one thing that we see families and folks getting into trouble with is you get behind on a payment. And you think, okay, I really want to try and catch up this payment. I think I can do this. And you don't get caught up. And so now you're afraid to answer the phone because folks are calling to say, where's the payment? When you find yourself at that point, be the one to reach out. Call the creditor and say, hey, you know, I got a problem. I'm running into some money issues. Is there something else we can work out? They are more interested in working with you than chasing folks down. They really are. Just some ways that folks can drain their budgets. You know, for my daughter's Christmas, the year that she was graduating from high school, she got a Mr. Coffee machine and a thermos cup. I'm really a boring person as far as gift giving is concerned with sending her off to college. Last thing I wanted to see is her going and spending $5 a day at coffee shops. And I hate to put this one up here because I know most people are responsible, but I will tell you, every year I had somebody coming in with a really great tan after having been on a really wonderful cruise. And all I could think of was, I'm in my 40s at that point. I'm not telling you how old I am at this point. I haven't been on a cruise, and I know where that money was coming from. That was coming from a student loan refund. So, you know, that's one of the things that a lot of students will drain themselves with. Carry your lunches. You know, even as you're working, carry your lunches. You know, I learned that from our debt management counselor at UMB, and I was always wanting to go out to lunch, and I was kind of shocked at how much money I was really fiddling away by spending it on lunches. Okay. Just the basics are total up all of your income, total up all of your expenses. Hopefully down here, it's going to be black, not red. Obviously, there are a lot of apps out there. People might want to keep track of their expenses on their phone. I know most of us do live with this thing now instead of paper and pen. But if you need to figure out ways to track your expenses, find what works best for you. I told my daughter when she would go out in her car, keep an envelope in the car, put the receipts every time she made a purchase so she could go home at the end of the week and know where she was spending her money. And that helped her learn how to track it better. Be savvy about your loans. Remember that you're going to enter a grace period when you separate from school. And then you're going to start hearing from your lenders. Actually, you're going to hear from servicers. Lender's the one that loans you the money, servicer's the one that collects. It may be the same entity, it may not. But you're going to have a brief period in there, that's 6 months, where you can figure out how you're going to budget all of this. So, you know, as you're going out, finding a job, figuring out what your budget needs to be, you want to factor in your student loans if you have them. There are a number of repayment plans, and I'll go through those very quickly this afternoon as well. But you need to decide what works best for you. You know, keeping in mind that the longer that you take to pay anything off, the more expensive it is because you're stretching out payments and paying more in interest. Biggest thing is make your payments on time every single month. This all gets reported to the credit bureaus. That's how they're tracking how good or bad your credit is, if you're paying things on time or not. Some things just to keep in mind, shop with a list. I'll tell you, if I go to the grocery store without a list, I can come out with $200 worth of groceries in no time at all. And I'm really bad about it. Use coupons and affinity programs. You know, if you belong to the Safeway Shoppers Club, if you belong to the Lace Club, whatever it is, take advantage of those things. Use a debit card instead of a credit card. Obviously, you're gonna pay interest if you use a credit card and you don't pay it off from month to month. Buy used. I saw you guys are having an eco-fest on campus, so today is one of the best things to tell you to buy used. Previously owned, as we like to refer to it. But the number of times that you can walk into a thrift store and find designer clothes with the tag on it because somebody bought it, got it home and went, what was I thinking? And they donated. Avoid stupidity taxes. You know, those are your overdraft charges. Using an ATM at a bank that's not yours, or using the bank, the ATM in the, you know, in the fast food stores or convenience stores. Parking fines, and I will admit to everyone today, last week I managed to get a stupidity tax myself. I saw the flash in the rearview mirror as I was driving. So there's one that's down on Route 301 someplace in Southern Maryland, so please be careful.
Yeah.
Take advantage of low-cost entertainment. And you know what? I'm cheap. I take advantage of low-cost entertainment at home all the time, even though I work full-time, and I don't have student loans. Instead of going out to the clubs with your friends, have your friends over, plan a night, board games, whatever. Apparently board games are the biggest thing, you know, it's come back into vogue. Credit reports, pretty much everybody is gonna have to worry about this at some point or another. Everything really gets reported here, your payments, any kind of public information. Lenders utilize that, utility companies, potential employers can use your credit reports in making a determination on whether to hire you or not. In Maryland, we don't have that, that's not legal to do that in Maryland. However, right across the road is DC. They may utilize that in certain hirings. So you want to make sure that your credit looks the best it possibly can. They're going to find out whether or not you're paying bills on time. They're going to find out whether or not you've got any kind of public judgments. And if it boils down to two people who have the exact same qualifications, they like both of you the most, they may run the credit report and decide, you know, who looks better on credit, because that is kind of a judgment of our character. So making the right decisions now will impact you greatly down the road. Some of these negative things stay on our credit reports for 7 to 10 years. Federal school, both defaults, bankruptcies, foreclosures, those stay on there. Long time, bankruptcies. There are 3 credit bureaus in the United States, Equifax, Experian, and TransUnion. Not everybody reports to all 3. Your mortgage company might report to all 3, but your car loan might only report to one. Your private loan might report to another. So we recommend that you pull the information in, and I'll give you the website for that. It's annualcreditreport.com. You are entitled by federal law to 1 free credit report from each of the 3 major credit bureaus per year. So that will make sure that you can take a look at that. That's called a soft inquiry. So anytime that you have any kind of checking of your credit, whether it's because you've applied for credit, as a hard inquiry, or pulling that down for yourself to look at. So just so you can understand when people say, oh, you've got 3 inquiries on here. Well, now you know what that means. You've either applied for credit or you've pulled that information in. Identification information is on there. Public information, so bankruptcies, tax liens, collection agency information. And a lot of times, you might have a bill come from a physician that goes to the insurance company, and somehow, we see it happen a lot, it skips you and ends up with a collection agency. So you go to apply for something and they tell you, well, you've got something on your credit report. A lot of times, if you know that you're paying everything, that may be what it is. You pay that off, you get it taken off the credit report. Credit account information, your student loans are on there right now, if you have student loans. They'll be listed as being deferred because you're in school if you're not making payments. Credit cards, mortgage, all of these things, car loans, any kind of loan is going to be listed. And how you're paying on it. So if you are on time every month, if you're 30 days late, 60, 90, 120, those are all reflected on there. And here's the information, annualcreditreport.com. In particular, if you are planning on buying a home, the last thing that you want to do is walk into a mortgage company and say, found the home of my dreams. ready to put the down payment down. They run your credit, and I'm sorry, we can't give you your mortgage because there's something on your credit report. Now, you've got to take the time to work that out. And I will tell you from personal experience, my husband and I went to refinance a car, and they said, Mrs. McSweeney, we can allow you to get the loan in your name, but Mr. McSweeney, you can't, you've got some derogatory information on your credit report. Well, everything is in our name together. There's nothing separate. As it turned out, someone else's student loan was on there as a defaulted student loan. Same first and last name, different middle initial. Date of birth was only a year off, but it was close. It was like, within 2 months and a year. Social Security number was the exact same, with exception to 2 digits. It was creepy. How can you have 2 people named that and have the same social without no exception to 2 digits? It took me 4 months to work that straightened out. In the meantime, we referred to it as Mike. Yeah, it was a minivan. You think he's going to driving that? We had a kid. So at any rate, but it gave me a lot of fun to be able to tell everyone yes. So do that ahead of time. If you're going to go for a mortgage, any major purchase, go ahead of time, 6 months, and look at what's going on with the credit report. Very common sense, don't take on more debt than necessary, but it's so easy to do, especially if you are trying, I know I gotta get into these classes, I know I gotta get these things. That's why planning ahead really helps. The true costs of any credit that you take out. Are there fees? What does the interest rate do? Does it stay the same? Does it move all over the place? Pay off your credit card balances every month. That's one of the best gifts that you can give to yourself, is not carrying a revolving balance. Because not only are you paying interest, but you're also paying fees on that balance. You're paying the bank for the privilege of letting you have that card. You are paying them, or that card. Know the terms of your credit agreements, because if you make a late payment, credit companies look at that as you breaking your side of the agreement. So if you make a late payment on your credit card, they can jack the interest rate up on you because you broke your side, so they don't have to follow the same rules anymore. They can change the rules at that point. So know what can happen if you make late payments. Don't finance something for longer than its useful life. If your car is only going to last 5 years, don't finance it for 6. Protect yourself from identity theft. The identity theft is a multi-billion-dollar industry. This is a job to people out there. The guys that are out there and ladies that are out there hacking into P.F. Chang's, Target, Home Depot. I'm sure you've seen that those are all out there, and hopefully none of you become a victim of that. But people work very hard to take your identity. They will dumpster dive. People are just nasty. They will go into your trash. So make sure that you are not throwing any personal information out. Shred. A halfway decent cross-cut shredder costs about $20, and it's a perfect investment. So that if you are getting credit card offers, if you have medical information that you don't want your identification on, shred stuff that you can get rid of. Sorry. They will either open a new account in your name if they can get a hold of it, of your information, or they will break into your existing accounts. So those are the 2 major types. One thing I will tell you is never, ever, ever carry your Social Security card on you, in your wallet. If you need to take it, I know it with working in financial aid, our students sometimes have to come in and verify identity. So they bring in their state issued ID, or their natural citizenship paperwork or whatever, and their Social Security number. And so many of my students carry their social card with them. Well, all you have to do is get a hold of a person's wallet with their social in there. So now you've got the state issued ID with the full name, date of birth, and you got your Social Security number. They got you. You now are open entirely to having your identification stolen. So make sure that you leave that card at home. I also tell folks, photocopy any cards that you keep in your wallet, front and back, and put that in a safe place, because God forbid that your wallet gets stolen. Now all you have to do is rush home, pull that out, and call all the numbers on the back of the cards, and you can report it stolen. And Shanna was talking, you were talking yesterday about how quickly people So
use your information.
just real quick, a background, I'm actually a branch manager with PNC, so I'm a little bit different than what Beth does. So in our area of banking, we see a lot of fraud because of people leaving their wallets or something in their car. Once someone gets that, literally in 20 minutes, them getting your driver's license and your bank account, either your debit card or a check you have in there, they're actually going back to a hotel that's local. They're getting someone that looks just like you or as close to you as they can get, putting them in the car, sending them to a bank, going in the second lane, the furthest lane, so they can't be identified that easily. They've now got your whole bank account and emptied your account within 20 minutes of getting your wallet. So that's something that's huge right now. They're making millions of dollars every single month off of it. Most of us don't realize that we do it. We either leave our wallets in our backpacks, in our car, anywhere. As long as they get that, you guys have 20 minutes between that time and the time when they go to a bank and do their withdrawal from your account. So we have to be very careful about leaving your stuff out.
And lock your car doors. Because in my neighborhood, I don't live far from here in Catonsville, and our police liaison that comes to our homeowners association meetings says every month they have a report of people's cars. All folks do is just walk along and pull the car door handles. And once they can pull the door open, they rifle through real quick and they move on to the next car. So don't make yourselves a victim. We have a financial literacy website on PNC at pnconcampus.com if you want any additional information. Yep. I also wanted to touch on some information about student loans. For those of you who may be getting a little bit closer to the point of going into repayment, just so you understand what you have. You want to know what type of loans you have. There are a bunch of them out there. It might be institutional loans. It might be, federal loans. It might be private loans. Yes, ma'am.
I have a question, I think that's relevant to the former presentation on
Sure.
this one, so I thought I would ask it.
Yeah, ask away.
What do you think are good options for graduate students to invest in? Because I was looking at this tracker, the expense tracker, and I saw that there is 6% interest for savings. I mean, our interest rates are tanking.
Yeah.
So,
Yeah.
it might go
Back in the
up,
day.
yes, it might go up, but what would you suggest are some of the good options to invest? Some flexibility also.
Yeah, as anything in life, savings accounts are, like you said, going down unless you happen to hit certain, banks will run promotions where a 6-month term might get you 1.3%, which is still not great, but it's better than 0.08. So that's something to look into. Shop around for your rates at different banks. If you need liquidity in your savings, you need to access it. Savings accounts are probably going to be the best option for you. If you don't need it, there are CDs. Every single bank out there has CDs. Just for example, PNC has the option, we can offer not only PNC bank CDs, but we can actually go out and buy CDs from American Express, any of the other companies out there. You get a better rate, but you also get the ability to be underneath the FDIC umbrella of the bank. As far as grad students go, those are probably the two best. If you want to invest in the stock market, there's ways to do that based on if you're conservative or if you want to be aggressive. That's something that we've also seen as well. But limiting every single dollar you have, we know how tight it is. Savings accounts and CDs are probably going to be the best option for you at this point. And then as you get out into your career and are making a steady salary and or limiting your bills that you have, investing in the 401k stocks would probably be the best way to go.
And even saving every month. If you can put $5, $15, $25 aside each month in anything, even just into, like Sean was saying, a savings or checking account, you are building something up as you go. So you've got an emergency fund, but if you don't use that money, then all of a sudden you've got a nest egg you can invest someplace when you're ready to actually start investing.
Mm-hmm.
So even just saving a little bit now when things are tight is in your best interest. And it's kind of keeping you safe. It's a safety net. Did we answer it? Okay.
Question about the credit card. I just want to if you open and close the credit card, does it affect the credit score? Yes.
And can you repeat the question, please?
Okay, one second. Sure. If you open a credit card and then you close it, does it affect the credit score? I know that it depends on how that is closed. So you need to check the wording. You want to make sure that it reflects that you closed it, not the creditor. Because if the creditor closed it because they're done with you,
that's not going to reflect well. That will impact the credit score in a negative way. If you're closing it because, okay, I've had, 15 credit cards and this is ridiculous. I haven't used 5 of them for 15 years. That's a little different, but you do want to make sure that on the credit report, it's reflected that you were, closed by credit holder. Like I said, if the creditor closes it, they're done with you.
It also goes by how long you've had the card open. You don't want to open a card just to get a promotional rate and then after 6 months pay it off and close it. You want to at least leave it open for a year to 2 years just to get that credit history established. If you did pay it off, but you also left it open. And once you close it, if you close it early, that will affect your score. Not dramatically, but you will notice a deduction in your score. So that's why it's important, even if you're not planning on using it again, it was a one-time card, leave it open for at least a year, and then at that point, then close it out, just so it doesn't affect you negatively.
You also want to, when you are closing accounts, you want to hold on to cards, obviously with the lowest interest rate, but also cards that you've had forever. My husband and I have closed several of our accounts because we weren't using them. And, unfortunately, having that access to credit, it burns a hole in your pocket, and all of a sudden you're going, oh yeah, I can spend this. You don't want to just do that. So you want to close the ones that maybe are newer, with the exception of how Shanna was referring to the promotional cards. One of the cards that we still have open is one that I had in my name when I was 22 years old. So, and that's been fun.
And there's a question?
Yeah, I mean, I'm an international student in the school, and most of the people saying me that you should have a good credit history for a future perspective, and they are saying that use much more as you can the credits. And then I'm a little uneducated in this, like credit scores, histories, and all that. So because they always say that get a good credit history, try to have a good credit history.
Anytime that you open, to summarize, what you're saying is folks are recommending to you that you use your credit in order to build your credit. And that is true. You don't want to use it a lot if you don't need. I mean, it's kind of like just going out and spending just to spend. You can develop really bad habits doing that. But if you have accounts open and one of the good things to do is if you're using your credit card each month and paying it off each month, that is definitely building credit. And I think it also depends on how often you feel you need to access it. I mean, if it's like, okay, I know that I've got money coming in at the end of the month, I'm going to go ahead and make the purchase, I'll pay it off. That does reflect well.
And there's other options too. There's what they call secured cards, where if you've never had credit before, most likely it's going to be hard to either get credit, or if you want to limit yourself, there are secured cards where you can make your own limit. You put, say, to start $250 or $500 on a card. You spend that every month. It's building your credit, but at the same time, you're not getting into debt because it's already been paid on that card. So it's like a debit card, but yet it builds your credit history. That's something we see a lot of students doing just because you're not going to get sucked into spending $3,000. You've already put that money aside for that purchase. And like Leslie said, or Beth said, if you also have a payment, say you have a car payment or auto insurance. Auto insurance is something most likely all of us have or will have at some point. You can do that on automatic pay on your credit card. You know that's coming out every month. Use that to build your credit. Put your auto payment on your card, and then just have an automatic transfer from your bank account to pay off that card every month. It's building your credit as well as showing that you're paying on time. So that's just a way to kind of beat the system without putting yourself in more debt.
What I've seen is a lot of students, because they're young, like they're still living maybe at home with mom and dad, so they don't have like to pay rent, or maybe they have their cell phone bill with their family plan, so they're not like in their name. So that doesn't help them to build their credit. So what I would recommend is like to take those charges and put them under your name, or maybe like take one of the bills at home and change the name of the owner of the account. And I don't know, like putting yourself and like, oh yeah, I pay the cable at home, or like the PGE account, something like that.
That's a good idea. Just be careful because, I mean, I'm sure we all want to assume that our parents are great, whoever we're living with is great, but sometimes things happen, and if some mistake happens, it's under your name, and you don't have that money, you're responsible in the long run for it. So be very careful what you do put in your name. Cell phone bills are probably the easiest way to go because they're yours, you know you're going to have them. Nobody can really run it up with you, so if you get and $100 in debt extra, it's your fault. But cable bills, if you're gonna live on your own or have maybe 3 roommates, maybe one of you takes the cable, one of you takes the phone, one of you takes whatever else it is and split it. So at least all 3 of you are earning credit at the same time, but yet you're not gonna be responsible for a $1,000 bill that you can't pay back.
And the secured card that Shanna referenced is one of the easiest ways that families help their kids sometimes too. That's one of the things that in the financial aid office, they'll say, well, should I put them on my card? Or should I be a co-signer? Keeping in mind that nowadays students, individuals under 21 have to have a co-signer unless they can prove that they have steady income to be able to pay that card off. But sometimes using a secured card is one of the easiest ways to just automatically get that credit being built, because they're using the card, they've already put skin in the game, and if they're making payments, it works the exact same way as an unsecured card. And basically the difference between secured and unsecured credit is there's something tied to it. Our houses, our cars, that's all secured credit. They can take something. Credit cards, it's really kind of iffy, where the money gets spent. They can't come and repossess your TV if you didn't purchase your TV with a credit card. They can't repossess your brains, so they can't do anything as far as your student loans are concerned. So that's unsecured credit as well. So sometimes using the secured cards is one way that our students, get something in their names. Student loans are another way. Yes, sir.
Can you share some tips? How can one increase their credit score? And the other question is that if we have one credit card and if we open the other, does our credit score goes down when we rely much more on other credit cards?
Does your credit score go down when you open credit cards, and ways to increase your credit score? Well, the biggest way to increase your credit score is pay everything on time, every single solitary month. Don't rack up tons of credit. If you have a lot of credit out there, they're looking at you as more of a risk than anything else. You are a risk. So the more credit, again, like I was saying, if you have 3 credit cards with $5,000 limits, it doesn't make you more valuable, it actually makes you riskier. And as far as credit, when you open credit cards, anytime that you apply for credit, that's called a hard inquiry. That's actually applying for that bit of credit. It bumps your credit score down a small amount. It's not large. It repairs in a year. If you're paying everything on time and doing what you're supposed to do as far as that's concerned. But any time that you apply for credit, you've got that little bump. So if you're applying for a house, applying for a car, applying for 3 credit cards all at the same time, it's going to nail your credit score. I saw several times when I worked at UMD, law students in particular were utilizing a lot of private loans. They would go out, students would go out and apply 6 different lenders and get denied because they bumped their credit score down. They chipped away at it so much. And I don't want to trash the law students, but at the time that I worked at the school, that was their only option, and that was one of the more expensive schools. Yes, sir.
So does this also apply for like when you request an increase in your credit limit? Because I recently noticed that I had applied for an increase in credit limit, and I noticed like my credit score went down by around 30 points or so.
Because just because you're requesting an increase, they still have to apply and pull for your credit again. It's like reapplying for the loan all over again for the credit card. You're asking for more money, they're going to go back and they're going to research all your credit history, not only with them, but with everybody else. They're going to see what you've done in the past year with all your other creditors. If you've been paying them on time, you have the income coming in to show that you're paying them off, then they're going to give you that increase. But if they go back and they pull it and say, well, he opened 4 more credit cards after he's been with us, he owes $10,000 and he's 30 days late on one, they're going to say no. So yeah, it does affect your credit when you go do an increase.
Well, what you mentioned about being a risk. So if you have more credit limit, but not the balance. So if it's, you don't know anything to the card and you have $20,000.
They also look, but creditors also look at how you're using it. If you've got that credit card and you're not beating the daylights out of it, they're going to see that you are being responsible with your credit. They're looking at every behavior, any kind of credit that we access. They look at our behaviors. So you can have, great credit and you're eligible for a $20,000 credit limit, and you're, borrowing $1,000 from it and paying it right off. That's to look much better than the person who has $19,998 on it, and are barely making the minimum payment, so.
And another thing to remember with that is that on your credit score, it'll show your high credit, so it'll show what you have available to you. It'll show what your highest limit was if you had, out there. If you had a mortgage for $500,000, let's say your high credit limit was $500,000. Another thing they look at is not only how much limit you have out there, but what you're utilizing of that limit, because it's another risk for you. So when we tell you guys to be smart about what credit cards you have, limit the number of credit cards, limit the number of debt, the more debt you have out there, even though it might be paid off, is still going into a consideration when they're looking at what you have left available to you to use. So if you only have 2 credit cards and maybe your student loans, that's better than having 15 credit cards with an additional $30,000 accessible to you when you're going to apply for a mortgage or a car loan, because they're going to see that you have access to put yourself in an additional $30,000 of debt.
Does student debt contribute or is considered when you're applying for a mortgage?
Everything's considered. Everything's
Because it's going to be having paid.
It's a debt. So they do look, creditors do look at different things differently though. I mean, a credit card is not going to be looked at
The same way
as
a student
favorably
loan?
as a student loan, because obviously if you have student loans, the anticipation is you're going to make more money and be a better credit risk.
Does student loans affect credit score?
They can, if you don't pay them on time, same thing as any
So,
other.
okay, once you go back into repayment, then.
As long as they're deferred, you're fine. It doesn't
Yeah,
affect you if they're deferred.
It doesn't.
But when you're
go
a
one way or
repayment
the other.
method, then
Are
yes.
you guys gonna talk about repayment, or, I have a question about the last, or the second to last bullet.
Yeah, she was getting into that, and we kind of got off track with the other questions.
Yes, sir.
I'm not sure if you already went over this, but when it comes to credit check, are there any negative side effects in doing a soft credit check repeatedly? Okay.
Then, yeah, there's no negative to going in because that's considered a soft inquiry. So you're not pulling your credit as a creditor, you're looking at what your credit report looks like. Yeah, it doesn't impact anything. And a lot of this information you all will get through your exit counseling sessions. Just want to go through the types of loans real quick. You've got your direct loans and you've got your Grad Plus loans. And these are loans that are going to be in your name. Some folks, parents may have loans in their names from your undergrad. Perkins loans, and private loans. Now, private loans are a different critter. You want to make sure that you're keeping track of that information separately because you're not going to get any information about that from the feds. Everything else will come from the feds. This information will come from your student lender. Again, lenders provide the money, servicers collect. Sometimes they're the same one. NSLDS.ed.gov, that is a National Student Loan Database System. This is where all of your Title IV funds, Pell Grants, Perkins loans, direct loans, Grad Plus loans, are all listed here. So if you have any questions about what's going on with your loans, it's all there, and it will tell you that it's in an in-school deferment. You know, it'll say where you're at school, all that information. Private loans,
Go back.
yes. Oh, there you go. NSLDS.ed.gov. Okay, all right. Private loans, annualcreditreport.com. And this is also where you're going to pull your information in to look at your free credit reports. Be organized, know where your loans are, know who holds your loans, know where the payments are supposed to go. Know that ahead of time. You've got 6 months to organize it, 9 months with Perkins loans. And make sure you set your plan up. So you know, okay, here's the minimum amount that I can be paying. And you kind of play the payment game. What should I be paying off more quickly? The highest interest rate loans usually. And look to pay things off more quickly. If you're paying $500 a month on a federal loan and $500 a month on a private loan, once you get done paying one off, apply that $500 over here and get rid of the rest of it quickly. Standard repayment, same amount every month for 10 years. This is probably the least expensive because the interest is balanced out over those 10 years. You're not spreading things out any further. The next one, graduated repayment. What you do is you start out with a smaller amount because most of us have smaller incomes. And as we go along, our income hopefully increases, the payments increase. But keeping in mind that you can have up to 25 years to do graduate or graduated repayment program, if you're taking longer to pay, you are spreading it out longer, interest is still accruing, you're gonna pay more in interest. Income-based and income contingent, these are payments that are based upon your income. So you submit either copies of your tax returns or your W-2s to show how much it is that you're making, and they do a percentage of your available income. If this is part of a forgiveness program, you want to keep in mind, with exception to the public service loan forgiveness program, it may be subject to tax. The only problem with this is, one of the reasons why we tell people to get into income-based or income repayment type of programs is because their income is low. Well, if your income is low and it stays low and someone is in a bad situation income-wise, you get to the end, you have it forgiven, who can afford to pay the taxes if the reason that you're on an income contingent kind of payment program is because you're poor? So you just want to keep that in mind, that if you are in an income-based type of repayment program that is going to lead to forgiveness, plan for that, because Congress has not changed the law yet. Pay as you earn. This one is also income contingent, but it's a little different. You have to be a new borrower. You couldn't have had any loans prior to October 1st, 2007, or have it paid off. Let me remember this. Yeah, no outstanding balance, and you have to have had the disbursement as of October 2011 or later. I have to remind myself. 20-year repayment. So under the plan, it's based on your income size, your household size. It's adjusted each year. It's usually lower than most of the other plans. It's never more than the standard. Paid over 20 years. There are advantages and disadvantages. Unless you are using it for public service loan forgiveness, again, the forgiven piece may be taxed. So you want to just keep that in mind. Extended repayment, they're just dragging it out longer. Again, it can be up to 25 years. So instead of having a 15-year mortgage, you've got a 30-year mortgage. This is what you're doing. You're mortgaging it longer. You want to make sure that you're choosing what's best for you. You know, just because someone says, "Oh yeah, this is a great program. It's going to work for you." You know, round peg, square hole. You want to make sure you're doing what's right for you. The longer you take to repay, the longer that it's going to take for you to pay off the interest and what it's going to cost you. And you can prepay your loans. Consolidation, a lot of students aren't doing this anymore because everybody's under the federal loan program. So, you know, unless you've got loans from 15 years ago that you want to wrap in, you don't really need to worry about consolidation. Keeping in mind consolidation also lengthens the payment period, makes it more expensive in the long run. Public service loan forgiveness, you would go under one of the income contingent, either pay as you earn or income-based program, but you're working in a field where you're having an employer verify that you're working in a field that's public service. It could be teaching, it could be social work, the public defender's office, those sort of things. So at the end of the 20 years, if anything that's left over is forgiven and not taxed. This is the only program that's not taxed.
So did you say that consolidating loans is more expensive in the long run?
Consolidating is more expensive if you take that length of time to repay it. If you consolidate your loans and instead of having a 10-year repayment, they give you a 20-year repayment, and you can repay it over 10 years.
For the 20 years. Okay.
Yeah. Because consolidating wraps all your loans in one place, but it very likely extends the length of time that you're paying it. So that's the reason it's more expensive, because you're extending it out longer. Honestly, if you can repay your federal loans in 2, 3, 5, 7 years, you've saved yourself a boatload of money. The biggest thing you can do to hurt yourself, though, is to make late payments or not repay, because if you default on your loans, which means you don't make a single solitary payment for 270 days, you're really going to hurt yourself, because the feds will come after you. It will impact your credit score for 7 to 10 years. If you have a license to do whatever it is that you do professionally, they can suspend your license. So for our nursing students, that could be an issue. For our med students, that could be an issue. they can come after your tax returns. If you want to work for the federal or state government, they can either refuse to hire you or fire you. Feds won't hire defaulted students any longer. And believe me, the FBI, the CIA, they all come in and they ask for this information from the National Student Loan Database, from our financial aid offices, if you're applying for those high security jobs, because they gotta know whether or not you're doing what you're supposed to be doing. So, any questions? Yes.
To qualify for deferment, do you have to be a full-time student?
In school, you have to be at least half-time.
Okay.
So whatever your school defines in school as half-time. For undergrad, it's usually 6 credits. For grad and doc, those can be different.
Okay.
And then deferments also can be you're out of work, you're in the military, Peace Corps, etc.
For repayment, if you make a payment while in school, do you automatically
Re-enter repayment?
Yeah.
No, if your student loans are in deferment and you choose to make a payment, like on interest or whatever, you're not gonna be put into repayment unless you say, I'm ready to go into repayment now. You can make payments while you're in deferment.
Essentially, that's what I'm trying to do, so bring the debt down before I graduate.
Save yourself some money if you're paying on the interest that's accrued.
Okay, thank you.
How good does it look if I pay off my student loan before I go to deferment? Or not deferment, before
Before you actually go in that 6 months,
No, so let's say, I pay off my loans now.
before you go into even.
And then I'm gonna graduate in 4 years, my loans are paid off by the time I graduate. How?
It's gonna show that you've repaid your student loans.
So it's not gonna say, oh, he did amazing because he.
They're not gonna like do streamers and stuff, but
Yeah,
yeah.
they don't do any fireworks on your credit card.
But it does help you because they see that you're responsible enough that, looking at it, they're gonna say, wow, you paid it off 4 years ahead of time. It does help you in the long run, but there's no bonus 200 points or something for it, so.
Okay, we'll get the fireworks.
We'll buy fireworks.
There you go.
So when you're in deferment, you're eligible for the repayment options that you discussed earlier, or?
You don't select any of the repayment options until you actually go into repayment. But if you're in deferment and you say, I want to pay on my interest, or I want to make some payments as I go, they're not going to put you into repayment.
Okay.
They're not gonna pay now, they want your money.
Yeah, oh no, they'll happily take your money. They'll also happily put you into the longest possible repayment plan, so they can make as much money on the interest from you as they can. So, but yeah, they won't refuse your money.
Once you go into repayment, if you do, let's say, you're stuck for $250 a month, or you said 10, 15 years. If you do extra payments every month, is that a problem?
Oh, you are doing yourself the biggest favor you can because you're paying it off early.
No.
And there's no problem because there's no prepayment penalty.
No, okay, that's
So,
what I want.
You want to check with your private loans to make sure that there are no prepayment penalties. I know ours, there is no prepayment penalty, so, and the majority of the borrowers that I work with, they're given a 15-year repayment. Right now, on average, I believe our average repayment is 8 years. So folks are taking this seriously.
There are lenders that get upset because you paid before the period?
Apparently.
It's kind of like in anything, like when you go out and you do a mortgage or you do a home equities are the same way. If you pay off the home equity and close that and don't need it any longer after like a 3-year term, say you close that in a 1 year, they actually will charge you all of those closing cost fees you would have accrued. So they could charge you around $3,000 for paying off a line of credit that you had on your home. So when you go apply even outside of school with other things such as mortgages, home equities, anything like that, always look ahead of time, even with cars. If you buy a car, you get a deal from the dealership for going through state court financing. You go in 6 months later, want to refinance it with the credit union because they have a better rate, you might get a penalty for doing that. So you have to make sure every type of loan that you take that there's not a prepayment penalty on that, or that you have to max it for a certain amount of time, because they do have that and it is out there.
They want to make money. That's the whole point of being a creditor.
Yes, I read.
Yes.
Yes. Read and ask questions too. I mean, when you're at a car dealership or you're at a bank and you're doing a loan, ask them, is there a prepayment penalty? If I decide that for some reason I hit the lottery and I pay off my mortgage or I pay off my home equity within 2 years versus 15 years, are you gonna charge me an extra $6,000? They have to go through that and legally disclose it to you. So just ask your questions and read everything.
Ask what fees? What fees? On the front end, in the middle, on the back end, what fees can I be charged?
Any other questions, concerns?
Is there another database that shows, so you mentioned the database nslds.ed.gov for the federal loans that we have? Is there another database that would list our like private loans?
Yeah, you would look under, on your credit reports, the annual creditreport.com.
And when you're checking credit real quick, like when you're checking credit, there's Credit Karma and all that stuff out there now. Yes, it's free, but you're gonna have to put a credit card or debit card number in, so just make sure you read the print there too, because if you don't cancel it within the first 7 days, they're gonna charge you $20 for that credit report. So anything you sign up on, just make sure you're reading it.
If you want to get a student loan, what are your best options? Should you go to your local bank? Should you go on that website? What should you do?
Student loans, and I know a lot of times folks will look at me and say, well, I can get a better private education loan rate than I do the federal loans. You want to keep in mind there are certain benefits to federal loans that private lenders cannot give. And I say that as a private loan lender. You know, you want to do what's best for you. Some families decide we're going to go entirely with private loans, because mom and dad are going to pay it off before the kid gets through school. And that is their choice. But if you're going to hold on to a federal loan, and you may not pay it off in time, and you may have it be working in a field where layoffs are possible, or you know, are in the military, you decide to enter the military and you need to defer it, there may not be the same types of flexibility. So you really want to make sure, because you're comparing apples to oranges at that point. So really take into account what is the final impact on my life. So. And with federal loans, you don't have to worry about doing a credit check. Private loans, they're looking at your credit score, your credit report, and that's where they're determining your best credit, your best interest rates. Yes, sir.
So I don't have children yet, but if, let's say I have a child 3 years from now, and something happens to me, like I pass away, does my child or other members of my family, do they have to pay my debts?
Depends on the debt.
Like my loan?
Federal loans, no. Some private loans, if you pass away, the lender will just wipe that out too. That's one of our benefits is if something, God forbid, happens to a student, the family doesn't inherit it.
Okay.
You know, the cosigner doesn't get left on the hook. And that was something that we did see a lot of, especially during the recession. You know, something happened, and the cosigner now didn't have a job, and you know they were toast. So, but it depends on the. I mean, credit cards. Yeah, the credit card company can go after your estate, so it can impact what you're leaving to your folks behind.
Okay.
Just to add to his question, but won't the insurance come into play during that case?
You mean insurance? If you have insurance?
Life insurance,
yeah, if you have insurance, that also can easily get tapped as well. I mean, creditors can go after your insurance. They'll go after your estate. So there are things that might be there. And there are some lenders that have insurance that cover private loans if something happens, you know, a disability.
Yeah, so you said if anything listed on the NSLDS website, so that's federal, right?
Yes.
In case of death, it doesn't transfer.
For the student loan and the grad plus that's under your name, you know, if you shuffle off your mortal coil, those loans, they disappear. They are forgiven. In the account of a parent plus loan, if the student passes away, the parent no longer has to pay on it as well. So those are some of the benefits that I mean, that's the icky benefit. You know, we don't want to think of our children passing away. We don't want to think of things like that. And the parent, if the parent takes out parent plus loan, and the parent passes away, likewise, the parent, no one else gets stuck with that loan. It's forgiven. Any other questions?
So one more. So earlier you mentioned that. So if I use a credit card to pay for my credit report, then just want to understand you. I should cancel the credit
Well,
report right away
yeah, so
so
what
they don't
happens
keep charging
is-
me?
For example, Credit Karma, you'll have to put a credit card, it'll say you need a debit or credit card number in there to give you your credit report. At that point, you're gonna read the fine print, it's gonna say to you, you're, after 7 days, you're gonna be enrolled in some membership, whether it's Credit Karma, whatever it is. So literally like on the 6th day, as soon as you get your report, you can do it the next day. Call them, be like, hey, I just got my credit report, I want to cancel my membership, they'll do it for you. But make sure you do it before that 7 days, because after 7 days is up, you're pretty much on the hook for it because you signed up, you clicked, you agree to their terms, so you're signed up for at least a month, and they won't refund that to you until the
Okay.
next month, so.
Right.
Annualcreditreport.com though is no charge. One
Okay.
time a year, you get all 3 credit reports. And some people will do all 3 at once. Other people like to check things throughout the year. So, okay, in January, I'm gonna pull Experian. In May, I'm gonna look at TransUnion. And in October, I'm gonna look at Equifax. One pretty hard.
So we can get 3 a year then based
You
on
can
what you
get
said, right?
one credit report from all 3 of the major
From all-
credit bureaus.
okay.
Experian, TransUnion, Equifax, one time a year.
Okay, got it.
Okay, go ahead. I'll get you.
Okay, so, I think like 6 months ago, I looked at my Equifax and stuff, and there appeared like a credit card, but it wasn't, I don't know if it was credit, it was some type of loan or something. There was no funds in it, but it was at a different address than mine. I had no way of contacting. someone.
There's no creditor.
I couldn't find my contact information.
Well, so you go directly to whatever, with the
credit
Equifax
report.
or whatever, you go right to them, call them, know there's something on your credit report that you don't see as being yours, you'd like to dispute it. They'll actually either ask you for a written letter or an email, or they'll take it.
I've already known.
Yeah, well, legally, they have to get back to you within 30 days of getting the dispute. So you want to call them again, talk to someone there, and have them open the dispute. They'll research it, tell you where it was from, if maybe they typed in, because it happens all the time, they type in the wrong address, or, it gets input incorrectly. So have them do the research for you. If it's not yours, they have to remove it off your credit report, so make sure you follow up with that.
And if you go to annualcreditreport.com, all 3 of the credit bureaus' phone numbers and websites are on there.
Can you make these slides available?
Oh, absolutely.
Yeah, we'll send them.
Yeah, we'll send them over to.
Right.
Thank you.
Absolutely. Oh, yeah.
Thank you.
Thank you.
I want to ask you a question.
Yes.
All plus loans,
If the holder of the Grad Plus loan passes away, yes, forgive it. If the Parent Plus loan, if either the student or the parent passes away, the Plus loan goes away. It's forgiven. Yeah.
My second question is, I took out a loan for my student graduate school, and I graduated in December, and I got laid off last Friday. But, my first payment was actually due in April, but I had to call my.
Is it a federal loan?
Navient is.
Kind of get in touch with Navient the minute that you get free from class today and say, I need to be in deferment because I got laid off.
I actually called them yesterday, and they actually started the process of giving me deferred. Will it show up negatively on my credit because I didn't make the payment in full?
Give them a call back and ask them how that's going to impact you. I'm not a servicer, so I'm not positive. I don't know how those rules work now because the banks were out of the federal loans. Call them and ask them how that impacts.
And since you did reach out to them, if
Right.
it were to impact you, you can ask them to make an exception for you since you did reach out to them and make sure that they're, they put some sort of note on the system not to report to the credit agency.
Yes, ma'am.
If you're unemployed or unable to make a payment, how long are you allowed to be in deferment for?
You can fully defer the loans for those reasons for up to 3 years.
Okay.
So you've got up to 3 years to tick away at that. What I usually tell folks is, okay, you get laid off, you're looking for a job, you've got it in deferment. And they'll usually do it either in 6 month or a year increments. That's usually what they'll do. The minute that you get employed, you can make the payment, call them up and say, I'm going back into repayment. So you're not using up all of that time. It's kind of that you're having that in your hip pocket for emergencies. Any subsidized loans that you have, when they're in a fully deferred status, are not accruing any interest. unsubsidized, they accrue interest from the date of disbursement to be paid in full. So you always want to ask for deferment first. If none of the things fall under deferment, there's something called forbearance. Everything accrues interest there, but at least you're either getting a reduced payment or you're getting some time away from it so you can fix whatever else is going on.
We have to end our formal part of the program now, but if our speakers have some time to spend afterwards.
Actually, I hate to say this.
But no?
I have to hit the road.
Okay.
What I would say is I have my, I will send my presentation over. If you have a question, write it down. Once you have that out available, everybody, my email address is on the presentation.
Okay, that sounds great.
Folks can email me with any questions. I am happy to take as many as you need me to answer. And if I don't know the answer, I have people to reach out to.
Okay, excellent. Thank you.
Thank you.
Everyone, let's give us.
They will. Back to you.